Hello traders, I hope you all had a wonderful expiry yesterday and today's move was equally important and money minting for all of you. I hope my analysis is helping you out. If you haven't subscribed to this channel, you can hit subscribe button. So what we're going to talk about today is the Friday's move. So as I said before, even that as much as there is importance factor about the expiry day, the Friday is equally important because it is a weekly close candle and that gives us a sense of direction which can be looked for the coming week. And so the analysis has to come for the Friday more importantly than any other day. So first, if we have to look at the price action, what I talked about is that some of you might have seen in my telegram that I was betting on the fact that where we saw huge close drive on yesterday's expiry, where the price was revolving in this box here. So this box was being maintained. If I can draw exactly a box here. So this was the box which was where the price spent a considerable amount of time. And once it exited that, so this is a close drive which I was targeting here. So this close drive gave a sense that downfall was very much severe in sense that it came during the last 15 minutes. It was quite reactive, and but when I see that today's price action, today's opening was very much bullish, where it formed a very long wick on the lower side, which was indicating a demand in itself, and that was continued with a Dow Jones theory of higher high and higher low. So this makes a very important point here that the bullishness in the Bank Nifty since the morning and forming of higher high, and this level was rejected yesterday. If you can see here, this level was rejected yesterday, and what I was planning in the morning, that I even updated you on the telegram, that if the price breaks this previous day high PDH, then we can see a continuation on the upside. So what happened in the market, that the market did form a bullish character, but it was not able to continue from here. The moment it came here again, it got hit, and the kind of reaction we got here, it was very, the magnitude of the reaction was this much, and we got a larger magnitude over here. So this reaction came, which negated the fact that we should go bullish. So my bullish call was only and only if the Bank Nifty breaks previous day high. So that was not done. So if it is not the case, then the moment it breaks our black line here, the moment it broke its black line, I was into short, and the other black line was very much near to it. So other black line was very much near, but even then the difference between both the black line was around 130 points. So it was a very good entry point where the stop loss was very well defined. The stop loss was just above the black line the moment it hit here, but it the stop loss should be 50 points here. So 50 points is coming around here, somewhere here was the stop loss for the black line. So I entered here, I got a square off here. As I updated, I got a square off. Then again, when the price came here, we should have sold. I didn't do that. I just took my one trade. Then after that, I was just waiting for the mid session to go off. I was not trading till 1 o'clock. So there was a sell here which got realized and squared off over here. Then there was again a sell entry point over here which got realized over here. Now the moment the price was halting around these levels, and it spent a considerable amount of time in between the black lines, I was expecting some kind of movement, and that movement was more biased towards the bull side. Well, the biasness was from here. So what momentum? The big institutions are present in the morning, and they are present during the last few minutes of the market. So these two factors are completely different to what retail traders are thinking, and exactly that thing hit my mind, that here the bullish character was maintained. Sorry, here the bullish character was maintained, and secondly, when the bullish character was revived here, it should have been somewhere the black line, and this should act as a good stop loss. So my call for the short covering came around here, around this level, but then the stop loss was hit here. Stop loss was hit, and this hitting of the stop loss did not, because once I got stopped out, but I was still waiting, because many times it happens that wherever there is a logical stop loss, that will get hit, because everybody is thinking alike. and big institutions are just trying to catch the fish into the net. And that's what exactly happened here. So I got stopped out, but the moment I saw formation of a candle which was following up on the bullish side, I entered over. So what we saw here is that a short covering position was to be expected during the last few minutes, and exactly that what happened in the market. If I am to show you on the data front here on the eye chart, then you will get to know that why that sense was very much logical. So on the data front, where I was looking at the OI breakup, and in the OI breakup I was considering 36,000 strike price, and on both the strike price I saw initiation of short covering. You can see here initiation of short covering at around 1:15, then around 2 o'clock, then again and again. It was I was just looking at the short covering and long unwinding, because the call seller were getting jittery about here. So there was not much short built up here. As you can see, if you can analyze, after 1 o'clock there was not much short built up. It was long and winding. The call sellers were getting jittery about it. They were getting scared, and there was a short covering kind of scenario here. So I was looking at it, and I was looking at the price action, and I was just looking, the sentiment which was developed in the morning should be repeated at the end of the day. So that's exactly what was the logic in the short covering, which many of you might have got surprised about, but it was naturally a case, because once you start to understand the market, how does it work, it becomes very easy to analyze. Now if we are to move forward and to discuss about the weekly close and how the next week will fold about, let's just switch to the chart here on the weekly front, and discuss what is there for us. So on the weekly front, as you can see that this was again a very important junction where I saw that the weekly candle was bullish. So if the big institutions want to give a signal that the weekly candle is bullish, they will lift the market up during the last few hours, and the short covering should come on Friday, and that usually happens on Friday. And that was the whole logic and more consensus about it. But if you see here that the kind of weekly candle we get here, it has broken the previous day high. It has broken the previous high of the weekly, the near high, and now it is very much bullish. The kind of shape it has given, the quick reaction here, kind of wick formation on the lower front, and the signal that there is a demand on the lower side. It signifies that a bullish character has come in the market. Now on the Monday, if we can see that some kind of down move, or circling around 36,000 or 35,800, some time would be spent, but ultimately a bull move should be there on the upside. So that what you can wait for. So for the Monday would be very interesting, that how the consolidation or there's a trend continuation on the upside should happen. So as of now, from the weekly front, it is very much bullish. So that's it, guys. I hope you like the video. Also, I have opened up the enrollment for the new batches. The batch would comprise only of 5 students, not much. I don't want to crowd it up, and I have to pay attention to each and every student. So just to enroll, if some of you are interested. Only 2 seats are left there. I hope you like the video. Do comment, subscribe, and share. Thank you.